Hello everyone, welcome back to Kenspire Business Mantra. In this episode, we are going to talk about another interesting but very important aspect, which is form of organization. We have already discussed about ideation, purpose, vision, mission and core values. With all these things, we come to the form. Form means what is the method, what is the format of your organization. What are the various choices? Now, quickly let us look through that. Proprietary concern, a partnership firm, a limited liability partnership, a private limited company, and a public limited company. Right? These are the broad options available for being in business. Right? Each one has its own dynamics, advantages, and limitations. Let us quickly look at that. When a business is a small business, when it cannot afford too much of cost of creating and maintaining it, better to start as a proprietary concern. Nothing much to spend, nothing much to maintain and things like that. Next level, when you want to do business with multiple people, simplest way to form is a partnership firm. The biggest disadvantage with proprietary concerns and partnership firm is unlimited liability for the entrepreneurs. Like the capital invested into the business plus the personal assets of the entrepreneur will be liable for the liability of the business. The third form is limited liability partnership, which is a one step better form than the partnership firm. Now, under limited liability partnership, it is still a partnership firm, but with limited liability for the partners concerned. This is a much better form, which is now available in India by virtue of the Act, LLP Act. More popular way of doing business is a private limited company. A private limited company, the biggest advantage is completely limited liability for the promoter. The liability is limited to the shares invested, the capital invested by the promoter into the business. The catch here is when a private limited company goes to the bank and takes a loan, various situations, the promoter has to give a personal guarantee. If the promoter signs as a personal guarantor to the company, the limited liability loses its advantages. The guarantee will be invoked to bring in the personal properties of the entrepreneur. The final form is public limited company, which is, there are again two types, closely held public company and widely held or listed public limited company. We'll come to that a bit later. Now, what is important is, even though there are multiple forms, for you to decide which is better for you, various criteria are there. Let us look at quickly one by one. First principle we need to keep in mind is, whichever form you want to run the business, you are different from the business. Please keep it in mind. The entrepreneur is different as an individual. The business is different as a separate entity. That clarity should be there. Many a times, entrepreneurs will consider them as one pocket and business as the other pocket. It's absolutely not advisable to think like that. Treat your business as a separate entity. That's point number one. Second thing, cost of creation and maintaining the organization. As already I told, proprietary concern and partnership firms are less expensive to create and maintain. But it comes with unlimited liability. But a private limited company or a public limited company, the cost of creation and maintaining is very high. Cost of compliance is very high. There's so much of hassles of compliance, but it has its own advantages. Take a balanced view on that. Then connect to your purpose and vision. We spoke about purpose and vision of the organization. When the purpose is to create a long-term value and there is a clear vision for a long-term vision for the organization, no point in creating a partnership firm or a proprietary concern. Go for straight away a private limited company. Create the base from day one. Focus on creating the net worth in the company, in the private limited company, and always have that as a measure, in order to create a long-term value. Then another factor which will determine this form of organization is capital to be invested in the business. If the total capital to be invested in the business is being brought in by the entrepreneur on his own, then absolutely no problem. When there is no need for external money to be brought into the business, you can choose to be a proprietor or a simple partnership firm. If you want to depend on another partner's investment or a bank, then most likely you have to get into, better to get into private limited company so that much clarity will emerge. Then even for doing the core business, multiple people involvement may be required in certain businesses. Somebody may take care of marketing, somebody may take care of operations, etc., etc. In such case of multiple people coming together, obviously it cannot be a proprietary concern. It is better not to have a partnership firm with unlimited liability. Better you create a LLP or a private limited company so that there is clarity. Most importantly, external point of view, brand image and credibility point of view, it is obvious that a limited company has a better brand image and credibility than any other firm, whether it is private limited or public limited, that has got a better brand image. So these are the various factors you have to go through. I repeat, you have to treat your business different from yourself. Cost of creation and maintenance, compliance, connect with your purpose and vision, capital to be invested, then multiple people involvement, then brand image and credibility. Consider all these factors and come to a conclusion as to which form of organization you want to work and go accordingly. Last but not the least, in this particular topic, it is important to take proper professional advice from a qualified chartered accountant. Specifically here I am saying chartered accountant because definitely CAs are well equipped to advise any of you as to the right form and to advise you as to the various advantages and disadvantages in your particular case, and please be guided properly by the professional advice. So take an informed decision rather than an easy decision, rather than a convenient decision. That is the message today I would like to share with regard to the form of organization. Friends, that brings us to the conclusion of this edition of Kenspire Business Mantra. Looking forward to be with you all in the next episode. Till then, wishing you all the best and have a great time. Thank you.